everyone, welcome back to another case study. Today we'll be covering euro dollar. I took a trade today in New York session, a short into a long, which we'll be going over. Starting off, higher time frame. Honestly, we can use the replay just to make things a little easier for us. But starting off, this is New York Open. Well, actually, sorry, an hour before New York Open. But what can we see that happened in London? Frankfurt Open had a big drop, grabbing all of this liquidity, inducing sellers into the market as they see this being their their BOS. So what does that tell me? That we're gonna have lots and lots of liquidity above this high, 108,956. Okay, and essentially this whole area up here is gonna be a trap. All right, 15-minute. Again, London drove down, grabbed all that liquidity, inducing sellers and trapping all of those buyers here. All right. We end up running long, going into New York. We start respecting this area to the left, okay, this inducement high. So we can mark that out. Get rid of this red box. So we got this inducement high marked out. You can see that's where price is now engineering liquidity. Go to the 5-minute. Okay, so look how we go long and we take out these highs to the left-hand side. Price sells off. Same concept, right? We grab that low, inducing sellers. This will now become a trap. We got liquidity above here. Okay, so we'd like to see price run up into there. That's exactly what we do. We take the high and we trade lower. And look what we did. Okay, so now we're approaching inducement high, but before we got there, what did we do? Price created, look how we had this kind of structure printed for us, right? Low to high to low, and we respected it, telling me now we have liquidity below here, okay? And then what do we got right below that liquidity? A liquidity block right here, okay? So something to keep an eye on for sure. We go higher, we end up taking out that inducement high to the left. We get a reaction to the downside. So I was actually looking for short-term sells into these equals, okay? Nothing too complicated. Liquidity to liquidity. Price takes out this low to the left. What did we do before we took it out? We induced buyers, okay? Leaving that inducement high, took the low. Now I want to see price build liquidity at the high and then run it. And if you look right above, we got a little cheeky 1-minute liquidity block. Boom. Okay, so I wanted to see price build liquidity like we are right now. Spike above, perfect. Entry taken. Actually, I was waiting for price to tap this wick here. So what does that mean by this wick? Well, this was actually, if I go to the 5, oh no, see the 5 was actually tapped there. So I had this marked out as a 5-minute liquidity block, just as an added confluence as to we can respect it and run away. So I was waiting for an entry there. And there I got tapped in. Cool. And my stop above. And short little scalp to the low, just like this. Okay. Something to keep an eye on. Do we have liquidity at this low right now? Right. We just took this. So essentially this is a liquidity block right now. So don't be surprised if price comes down and respects it. Maybe a pullback, right? And then continue, or take the high out and then go. So a couple different options, but this is just something to anticipate, right? Nice, so we get our reaction. Now we're trading at the low, looking good. But again, liquidity block, so we can expect false reactions. And we actually end up coming back to the high, sweeping the high again, just like this. And then running to target, okay? So quick scalp, in and out. Again, I know, as you guys know, I've mentioned in the past, I don't really scalp no more, to be honest with you. I kind of just focus on whatever the move of the session is going to be. That's what I'm focusing on. But just because I was super confident in this, that we needed to take these equals before running higher, I was okay with taking the scalp. So situational, but still clean nonetheless. It makes sense. Now we stop below this inducement, this inducement low where we've built liquidity. Boom, buy entry. Okay. Stop goes below, so 3.5. We'll go 4 pips. Now, this is just the extreme entry. So what I did was I actually added like half of what I would normally risk on a normal entry, just because it's an extreme. I'm taking it off the left, and then when we get a more of a reaction-based entry, I will take the rest of my position. Okay, so as you can see, price comes up, grabs this little 1-minute high, comes back to the low, and grabs the lows. Something to keep an eye on. Oops, and almost skipped through everything. But we didn't, we're good. Okay, so we got this liquidity block left at the extreme, all right? And if we keep playing price, what did we just do here? Well, we just took this high, which tells me we're gonna have liquidity where? Boom, here, all right? You look how we spike right into this imbalance, making this an inducement low, right? And right below where we have that liquidity is we got a nice liquidity block. Simple as that, okay? And again, just to refresh you guys, where are we targeting? Boom. Because remember, we took this low over here, which means we got lots and lots of liquidity above this high, 108,956. Okay, so we'll continue on with price. We come down below, and we get tapped in. So here's our entry here. Stop goes to below. And again, where are we targeting? Up here. Okay, so we get tapped in, and price moves away. Perfect. Now, what can I see being built here? I mean, this is an easy one for you guys. Look how price is just squeezing, squeezing, squeezing. We get a bullish move to the upside, comes back down. We got liquidity below here, right? You can draw it like this, little trend line liquidity. But just understanding what price can do next. And look how we stab below and keep running. So after we got that, we got like another liquidity block form. This is when I rolled my stops. Okay, this actually went break even. And I just tucked this stop below this low and continued holding. Perfect. Take out this high. What does that tell me? I can take partials. Okay. No reason to be holding full position. Of course, unless you're up nice on your account and you're comfortable holding that, then no problem. But in this example, what I probably would have done, or what I did do, was I took 50% off here. Okay. And I'm holding the rest to here. All right. And I think it ended up taking a little bit, but we'll play it out. And boom, target hit. Okay, so short, extreme entry on the long, taken at the liquidity block from the left-hand side, below the equals, below the inducement low. Okay, and then entry taking off the reaction. Okay, more of a confirmation-based entry for you guys, but then full target was hit here. Okay, so nothing too complicated, very straightforward, and hopefully I explained it as best as possible for you guys. But yeah, I hope you guys enjoyed, and I will see you guys on the next one.